Imagine a world without oil, a vital resource that powers our cars, heats our homes, and fuels our industries. What if that world is closer than we think? Welcome to an exploration of a global conundrum that's happening right now, an oil shortage. Some of the most significant oil producers in the world, Saudi Arabia and Russia, have voluntarily reduced their oil production. This decision, coupled with sanctions on Russian oil exports, has led to a substantial drop in the global oil supply. The European Union's sanctions have hit Russian oil exports hard, with a reported decrease of over half. This shortage is exacerbated by a lack of willing ship owners to transport Russian oil, leading to a further decline in available oil on the global market. Meanwhile, as the oil supply dwindles, demand is on the rise, particularly in countries outside of the United States, the European Union, and China. This rising demand against a backdrop of decreasing supply is creating a perfect storm, pushing Brent oil prices to potentially average around $84.6 per barrel in 2023. However, the oil shortage isn't the only energy concern on the horizon. Gas demand is also declining, particularly in North America and the European Union. This decrease is partially offsetting the gains from higher oil prices, creating a complex and challenging landscape for energy companies worldwide. This situation is a global conundrum indeed, with far-reaching implications for our economies, our industries, and our way of life. But amidst this crisis, one company is navigating the stormy seas with a strategy that's turning heads. As we grapple with this shortage, one company stands out in its response: ExxonMobil. ExxonMobil, a name synonymous with the oil industry, finds itself in an intriguing position amidst this oil shortage. As the world grapples with oil deficits and shifting energy landscapes, this oil titan is maneuvering its way through the turmoil, capitalizing on the opportunities that have arisen. The company, one of the largest in the United States, has announced plans to pump more money into energy projects in the coming years. The reason being high oil demand and soaring prices. Even though this increased spending won't lead to an immediate surge in production, it's a strategic move aimed at securing ExxonMobil's future in an increasingly competitive market. But it's not all smooth sailing. The company's output for the next year is expected to remain flat. Now, this might seem like a setback, but in reality, it's a reflection of the company's focus on maintaining stability amidst uncertainty. In fact, Exxon's resilience is further demonstrated by its ability to adapt to missed targets, like the goal of pumping 1 million barrels of oil per day from its Permian operations, which has been delayed by about 2 years. However, these challenges do not seem to deter this oil behemoth. Instead, they appear to be fueling a determination to succeed. ExxonMobil is not just surviving the oil shortage, it's capitalizing on it. Through strategic planning and shrewd business decisions, the company is positioning itself to benefit from the oil shortage, and the results are already showing. ExxonMobil reported its biggest quarterly profit ever in the second quarter of 2023, a staggering fourfold increase from the same period last year. This was largely due to soaring energy prices and the company's tight control on spending. So, while the world watches the oil industry with bated breath, one thing is clear. ExxonMobil, despite the challenges and changing tides, is not just weathering the storm, it's riding the waves. Yet, despite these challenges, ExxonMobil seems to be coming out on top. Scene script. ExxonMobil appears to be not just surviving but thriving in this oil shortage. But how? Well, let's delve into the strategy of this oil titan. ExxonMobil's approach to this crisis is multifaceted, and it begins with a tight rein on spending. In an era where every penny counts, ExxonMobil is a model of fiscal responsibility. This disciplined spending has helped the company weather the storm and come out on the other side stronger. But there's more to the story than just savvy spending. The company is also capitalizing on the high oil and gas prices that have resulted from the shortage. These soaring prices have led to a boost in profits, as evidenced by ExxonMobil's record-breaking second quarter in 2023, where it reported its biggest quarterly profit ever, a whopping $17.9 billion. This isn't just a one-off event either. ExxonMobil is planning for the future and expects to generate significant cash flow in the coming years. By 2027, the company could potentially earn a staggering $100 billion in surplus cash. And what is ExxonMobil doing with this surplus cash, you ask? It's being put to good use in a three-pronged strategy. Firstly, the company is using it to pay down debt, a smart move that strengthens the company's financial position and sets it up for future success. Secondly, ExxonMobil is raising shareholder distributions, a move that rewards loyal investors and attracts new ones. And lastly, the company is implementing a share buyback program. a strategy often used by companies to boost their stock price and reward shareholders. In other words, ExxonMobil is not just weathering the oil shortage, it's using it as a catalyst for growth and prosperity. This strategy is a testament to the company's resilience, foresight, and business acumen. It appears that ExxonMobil is turning this oil shortage into a business opportunity. While the world feels the pinch of the oil shortage, ExxonMobil's stockholders might be seeing green. The energy giant's strategic response to the global oil deficit has had a significant impact on its stock prices, and the benefits for shareholders are starting to materialize. In the second quarter of 2023, ExxonMobil reported its largest quarterly profit ever, raking in a staggering $17.9 billion. This remarkable figure represents a four-fold increase from the same period in the previous year. The surge in profits was largely due to skyrocketing energy prices and the company's tight control on spending. Interestingly, this profit margin even outstripped Exxon's previous best quarters in 2008 and 2012. But the good news for ExxonMobil's shareholders doesn't stop there. The company has been effectively using its extra cash to pay down debt, increase shareholder distributions, and implement a share buyback program. These actions not only strengthen the company's financial position, but also enhance the value of its stock. Looking ahead, the target price of ExxonMobil shares has been raised, reflecting the anticipated oil shortage in the second half of 2023. This adjustment in target price is a clear indication that investors and analysts are optimistic about the company's ability to capitalize on the oil deficit and generate even higher revenues. Furthermore, ExxonMobil's decision to increase spending on energy projects, despite criticism from the Biden administration, signals the company's confidence in its ability to navigate the challenging oil market. Although this increased expenditure won't immediately lead to more production, it's expected to generate significant cash flow in the long term. To put this into perspective, Exxon is projected to earn a whopping $100 billion in surplus cash by 2027. This forecast bodes well for the company's stock, suggesting that ExxonMobil's shares will continue to be a lucrative investment for shareholders in the foreseeable future. In the face of adversity, ExxonMobil's stock appears to be a clear beneficiary. The company's strategic response to the oil shortage, coupled with its robust financial performance, has created a winning situation for its shareholders. As we continue to navigate the twists and turns of the global oil market, one thing is certain: ExxonMobil's stock is one to watch. So, what's next for ExxonMobil and the oil industry as a whole? Well, let's start with a glimpse into the near future, the year 2024. The expectation is that ExxonMobil will see a recovery in its combined oil and gas sales. Despite predicted lower gas demand in the preceding year, the powerhouse that is ExxonMobil is expected to bounce back stronger than ever. But what about oil prices? The forecast is that Brent oil prices, which serve as a major benchmark price for purchases of oil worldwide, will average around $84.6 per barrel in 2023. However, there's a twist in the tale. Prices are tentatively expected to increase in the last quarter of 2023 and the first quarter of 2024. This surge in prices could potentially be a boon for ExxonMobil and other players in the oil industry. Now let's shift our gaze to the geographical distribution of ExxonMobil's sales. Most of the company's natural gas output is sold outside the United States, with Asia being the largest purchaser. As gas consumption in North America and the European Union is expected to decline, consumption in Asia is forecasted to resume growth. This shift in demand could impact the company's sales strategy and potentially open up new avenues for growth. In the grand scheme of things, the future of ExxonMobil is poised on a tightrope of global trends, market fluctuations, and geopolitical factors. The company's ability to adapt and evolve will be crucial in determining its future trajectory. Wrapping up the numbers, the earnings before interest, taxes, depreciation and amortization, or EBITDA forecast for ExxonMobil in 2023 is slightly lowered, but raised for 2024. This signals a potential for increased profitability, which could positively impact ExxonMobil's stock price. As we face an uncertain future, one thing is clear: ExxonMobil is poised to navigate whatever lies ahead. And as always, it will be fascinating to watch this oil titan maneuver through the ebb and flow of the global oil industry.